Crypto guru Sam Bankman-Fried's 16 billion fortune shrinks to only $1 billion in hours, and he's basically the head guy of FTX, right? So, freewheeling Bitcoin evangelist Sam Bankman-Fried has dropped from the ranks of the world's richest people after watching his nearly $16 billion fortune shrink to about $1 billion in a matter of hours as his company FTX imploded. The 30-year-old crypto tycoon, known as SBF among Bitcoin enthusiasts, has lost about 94% of his estimated $15.6 billion net worth since Tuesday, when FTX was forced to seek a bailout from Changpeng Zhao's rival platform Binance due to a crippling liquidity crunch. After the collapse, Bankman-Fried's net worth fell to about $1 billion, the sharpest one-day plunge ever recorded by Bloomberg's Billionaire Index. The outlet noted that Bankman-Fried's stake in FTX was valued at $6.2 billion prior to the deal, while his cryptocurrency trading house Alameda Research was about $7.4 billion to his fortune, and concern about FTX's liquidity emerged after CoinDesk reported that Alameda was heavily invested in FTT, a token issued by FTX. The bailout itself was in grave doubt as of Wednesday, and Binance told the Wall Street Journal it would walk away from its initial offer to buy FTX after taking a close look at the platform structure and books. Earlier in the day, a source familiar with the matter said Binance officials were taken aback by the extent of the platform's financial trouble. Our hope was to be able to support FTX's customers to provide liquidity, but the issues are beyond our control or ability to help, Binance said in a statement. It wasn't immediately clear if talks between the two sides were dead. The Binance deal had emerged after signs of panic about crypto investors who withdrew $6 billion in holdings in just 72 hours before the deal was announced on Tuesday. On an average day, we have tens of millions of dollars of net outflows. Things were mostly average until this weekend a few days ago, Bankman-Fried wrote a message to staff on Tuesday, according to Reuters. Zhao said his company had agreed to buy FTX on Tuesday as it suffered a significant liquidity crunch, and the deal was pending due diligence and did not include FTX's U.S. operations. The Binance bailout would mark the culmination of a stunning downfall for Bankman-Fried, who became increasingly influential in the tech world as FTX took a leading position among cryptocurrency exchanges, buying up the assets of rivals at a frenzied pace in recent months. And Bankman-Fried tapped the likes of NFL legend Tom Brady and his soon-to-be ex-wife, Gisele Bündchen, as partners during FTX's rise, appearing alongside the supermodel and FTX's head of fashion and luxury partnerships, Lauren Remington Platt, at the Salt Crypto Bahamas conference last April. Bankman-Fried leaned into the notoriety, once claiming that he could spend up to $1 billion through the 2024 presidential election while playing would-be kingmaker to mostly Democratic candidates. Bankman-Fried later walked back that figure, though recent estimates place his midterm spending at roughly $40 million. Brady, Bündchen, and other high-profile FTX investors now stand to lose the entirety of their stakes. I'm sorry I didn't do better, and I'm going to do what I can to protect customer assets and your investment, Bankman-Fried wrote in a letter to investors, according to Bloomberg. I wish I had more details for you guys right now. I don't yet, the letter added. The Post has reached out to FTX, Bankman-Fried, and representatives for Brady and Bündchen for comment on this situation. And FTX's downfall was the latest in a series of major collapses in the cryptocurrency sector, where volatility has reigned for months during a sharp downturn in global economic conditions. Previous meltdowns impacted the Terra USD stablecoin and the crypto hedge fund Three Arrows Capital. Now, let's actually check out this article too. Crypto giant Binance abandons the proposed bailout of failing rival FTX after finding financial black hole in the books. And crisis sends Bitcoin plunging 17% to 2-year low. So struggling cryptocurrency exchange FTX faces a fresh crisis after its biggest rival Binance said it would abandon a proposed bailout in a saga rocking the wider crypto market. But basically, the issues are beyond our control. Blah, 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 blah. It came just a day after Binance signed a letter of intent to acquire FTX's non US assets in a deal to rescue the rival exchange, the world's fourth largest, from potential insolvency. But the plan was subject to due diligence, and Binance reportedly found a financial black hole in FTX's books, a gulf between assets and liabilities that made the takeover a non starter. Meanwhile, FTX, which had sought rescue from a liquidity crunch after users withdrew $6 billion in 72 hours, is also under investigation by U.S. financial regulators over concerns about handling of customer funds, according to Bloomberg. The investigation by the Securities and Exchange Commission reportedly began months ago, but is said to be related to the recent liquidity crisis that sent FTX scrambling for an industry bailout. Adding to his regulatory concerns, most of FTX's legal and compliance staff quit Tuesday evening, according to a report from news outlet Semaphore citing people familiar with the matter. And FTX did not respond to inquiries from Daily Mail. And experts called the shock collapse of FTX another alarm warning for the battered cryptocurrency market and said investors should be cautious for a while. This is another black eye for the industry, said David Holt, a cryptocurrency industry expert at CFRA. Let's see. Binanceans, given the events that transpired over the last couple of days, I want to reiterate a few points. 1. We did not master plan this or anything related to it. It was less than 24 hours ago that SBF called me, and before that I had very little knowledge of the internal state of things at FTX. I could do some mental calculations with our revenues to guess theirs, but it would never be very accurate. I was surprised when he wanted to talk. My first reaction was he wants to do an OTC deal, but here we are. 2. As the due diligence for the deal is ongoing, I want to remind everyone, do not trade FTT tokens. If you have a bag, you have a bag. Do not buy or sell. As soon as I finished the call with SBF yesterday, I asked our team to stop selling as an organization. Yes, we have a bag, but that's okay. More importantly, we need to hold ourselves to a higher standard than even in banks. 3. Obviously, do not comment on the deal publicly or internally if you're not directly involved. Don't ask. We have got a good team handling it. Things will play out. 4. FTX going down is not good for anyone in the industry. Do not view it as a win for us. User confidence is severely shaken. Regulators will scrutinize exchanges even more. Licenses around the globe will be harder to get. And people now think we are the biggest and will attack us more. But that's okay. We are used to being open and leaning into headwinds. In fact, we embrace scrutiny. We must significantly increase our transparency, proof of reserves, insurance funds, etc. A lot more to come in this area. We have a lot of tough work ahead of us, not to mention prices swinging wildly. 5. Speaking of prices, as I have said many times over the years, ignore the prices. Let's keep our heads down and focus on building products people use. It has always worked over the years, and today is obviously no exception. Lastly, I want to say I am really proud of each and every one of you for all your hard work, and as a team, thank you. We still have many challenges ahead of us. Let's continue to push ahead and help increase the freedom of money all around the world steadily and consistently. Now, here's the thing. Now, what's interesting about this kind of goes to show me that Binance is probably going to be one of the top dogs in terms of like long term in the crypto space, right? Because they're able to weather the storm, from what it seems like. They are in a financial position that they are healthy enough to actually bail out other companies. But what's interesting as well is that they are financially responsible enough to walk away from a deal, even though originally it might be tempting to just buy out a competitor. Because they see like this is a very big financial issue that would harm us if we were to take on this deal. So I actually really like that. So the turmoil comes after Binance's billionaire boss Changpeng Zhao shocked the 1 trillion crypto industry with a proposal to take over troubled exchange FTX, which is led by his chief rival and one-time disciple Sam Bankman-Fried. Zhao helped spark an exodus of users from the 3-year-old FTX.com exchange by actively undermining confidence in its finances. And Bankman-Fried has seen 94% of his net worth wiped out as a result. On Sunday, Zhao tweeted that Binance would sell its $2 billion of holdings of FTX's in-house digital token FTT, citing recent revelations that have come to light. He did not specify the allegations, but his intervention came just days after pseudonymous crypto researcher Dirty Bubble Media had accused another of Bankman-Fried's companies, Alameda Research, of insolvency. Markets were then stunned when Binance signed a non-binding agreement yesterday to buy FTX's non-US unit to help cover what it called a significant liquidity crunch. FTT, the smaller token tied to FTX, was down a further 23% after collapsing 72% on Tuesday. Its market cap dropped below $600 million, down from around $3 billion at the start of the week, according to CoinGecko data. FTX and Binance did not disclose the terms of their agreement, and markets continue to roil amid uncertainty over whether it will proceed. What if the deal doesn't go through, or Zhao comes back and says, I'll give 10 cents on the dollar? That's the blind spot the market is not ready for, said Scotty Siu, investment director at Axion Global Asset Management in Hong Kong. Zhao on Wednesday tweeted a letter to staff that there was no master plan behind the deal and that FTX going down is not good for anyone in the industry and is not a win. Regulators will scrutinize exchanges even more, he said in the letter earlier reported by the Financial Times. Licenses around the globe will be harder to get. So NFL star Tom Brady and his former wife Gisele Bündchen are believed to have suffered losses in the FTX collapse. The ex-couple took an undisclosed equity stake in the company last year, with Brady announced as a brand ambassador and Bündchen an environmental and social initiatives advisor. Whatever the value of that stake was, is now likely worth pennies on the dollar, and the ex-couple's combined net worth is estimated to be $650 million. The FTX crisis unfolded when the exchange was hit with $6 billion in withdrawals in 72 hours before yesterday morning, Reuters reported, citing a message sent to staff by Bankman-Fried. Our teams are working on clearing out the withdrawal backlog, Bankman-Fried said on Twitter. This will clear out liquidity crunches. All assets will be covered one-to-one. This is one of the main reasons we've asked Binance to come in. Kamni Zhang, head of research at 4Elite Capital Management, a Hong Kong-based crypto fund manager, said, the whole thing still looks like a dark hole. We are not sure how contagious this could be, but I believe institutions need to show their proof of reserves ASAP. Confidence does not recover before that, and market liquidity had thinned, so the uncertainty would hurt all assets, he added. It's fast comeuppance for Bankman-Fried, no stranger to bare-knuckled exploits in his role as founder of Alameda Research, the crypto trading firm whose fate was left unmentioned in the tweets announcing the bailout. The former Jane Street trader has been unapologetic about Alameda's willingness to pounce on profit opportunities in the Wild West crypto space, framing it as part of a long-term plan to give away billions to charity. FTX.com was valued as recently as January at $32 billion in a fundraising round from investors including Temasek Paradigm, Ontario Teachers Pension Plan Board. Oh God, are you kidding me? You have a pension plan in a crypto firm? Oh, they lost probably everything. That's scary. And SoftBank Vision Fund too. And Bitcoin swung between gains and losses, dropped below $19,000 for the first time since October 21st. BNB, the native token of the Binance blockchain, did the same and was down about 5% after initially jumping as much as 15%. For the crypto industry broadly, FTX's demise is another example of a once towering player laid low when a crisis of confidence forced a run on its assets. Like others before it, including lenders Celsius Networks and hedge fund Three Arrows Capital, reserves proved inadequate when market sentiment turned against it, even as top executives said nothing was amiss. The tension between Bankman-Fried and Zhao has been brewing almost since the start. Back in 2019, Binance invested into FTX, then a derivatives exchange. The next year, Binance launched its own crypto derivatives, quickly becoming the leader in this space. And tensions rose as the two companies increasingly had been seen as different by regulators. Bankman-Fried was testifying in Congress while Binance was said to be facing regulatory probes around the world and emphasized that it's not headquartered anywhere. The two companies have also been competing for assets, with both bidding for assets of Voyager Digital. FTX won the auction of Voyager. Binance is the largest crypto exchange by far, with trading volume of about $40 billion so far today. FTX is second in spot trading with volume of about $4 billion according to CoinMarketCap data. And CoinMarketCap is owned by Binance. And a warning of wider and longer contagion came from Zan Quan, a board advisor at Raffles Family Office and part of the board of Singapore Association Access, which includes participants involved in cryptocurrency and blockchain together called Decentralized Finance or DeFi. Alameda is a big market maker in the DeFi market. More things will unfold, she said, referring to Alameda Research, a trading firm founded by Bankman-Fried that has close ties with FTX. Analysts drew parallels with the collapse of Terraform Labs earlier this year after a stablecoin, TerraUSD, dived, setting off a series of other bankruptcies at Singapore fund Three Arrows Capital and U.S. fintech firms Voyager Digital and Celsius. Bankman-Fried said his teams were working on clearing the withdrawal backlog, though uncertainty in the market about the bailout status and the depth of the problems kept traders nervous. Bobby Ong, co-founder of crypto analytics website CoinGecko, said the deal could cement Binance's dominance of market turnover, but changes to the broader landscape were unclear. It's probably safe to expect this move will further consolidate their lead as FTX was a top 10 player with a sizable share of volumes, he said. However, how existing users of FTX will respond to this development remains to be seen. Will they continue to trade with FTX or migrate to other exchanges, either centralized or decentralized? Singapore state investor Temasek Holdings, an FTX shareholder, said in emailed comments to Reuters, "We are aware of the developments between FTX and Binance and are engaging FTX in our capacity as shareholder. Binance will conduct due diligence in coming days as the next step toward an acquisition of FTX.com, and the U.S. operations of Binance and FTX are not part of the deal," said Bankman-Fried, who is from California but lives in the Bahamas where FTX is based. It is not clear how regulators will regard a deal between the two crypto exchanges. U.S. antitrust enforcers could insist on looking into the merger, antitrust experts said. Binance is also under investigation by the U.S. Justice Department for possible violations of money laundering rules. And Reuters reported last week that is one of a series of investigations this year into Binance's troubled history with financial regulatory compliance. We don't know whether the monopoly will be a fact, Zhang said. There must be tons of regulatory pressure for this deal. What is fact is that Binance has been in the dominant position for as long as the leader is putting the customers first, pursuing a compliant and transparent framework, welcoming fair competition and supervision, the industry will grow its way forward. So feel free to give your thoughts on this. But here's the thing that people need to understand too, right? This is why you should really only, for the most part, put money into things that you are, one, okay with losing if you were to lose it, or two, put your money into brokerages that are FDIC insured or insured in some way so that if worst case happens, you will be covered, right? For example, one of the reasons why I like Robinhood is because they are insured, right? The reason why I like something like E-Trade, they are insured, right? Now, obviously, it's a little bit different, but it's the same reason why a lot of people keep their money in bank accounts, right? Because they are insured up to a certain amount, right? Now, technically, there is a one step above that for like security reasons that you could basically buy US treasuries for like an emergency fund, but you don't really get much money back, right? But in terms of like whether you should put your money into like a bank or maybe potentially put your money into like US treasuries, maybe US treasuries would be more of a better option because you're 100% guaranteed the money and you do have some sort of return. But yeah, only really deal with financial companies where your money is insured, right? So let's see. Na, 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 na. Let's see, Brave. Okay, Robinhood Insurance. Let's see. Right here. So, is my money insured? And we're at Robinhood.com. All right. Brokerage customers can elect to participate in the Brokerage Cash Sweep program, the Intra-Fi Network Deposit Sweep service, which, by the way, you potentially getting like 3.75%, which is pretty nice right now. Through Brokerage Cash Sweep, cash deposited at these banks is eligible for FDIC insurance up to a total maximum of $1.5 million, up to $250,000 per program bank, inclusive of deposits you may already hold at that bank in this same ownership capacity. These banks will also pay interest on the swept cash, blah, 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 blah. So Robinhood is not responsible for monitoring the amount of your deposits in any program bank, whether these deposits are made through the broker's cash sweep program or otherwise. To determine whether the amount on deposit exceeds the limit of available FDIC insurance, you're responsible for monitoring the total amount of your assets on deposit with each program bank, including amounts in other accounts at the program bank held in this same ownership capacity. Basically, this is kind of like saying like at each bank that they're using, you're insured up to $250,000. But let's say that you already have $250,000 in like a separate bank account at that bank, well, then it's not going to be covered past the 250, right? So Robinhood Financial LLC is a member of SIPC, which protects securities customers of its members up to $5 $100,000, including $250,000 for claims for cash. Explanatory brochure available upon request or at www.sipc.org. Please note that until funds are swept to a program bank, they are covered by SIPC protection. They are not covered by SIPC protection when on deposit at a program bank. But yeah, this is why I'd prefer to use something like a Robinhood instead of like an FTX because I don't think FTX has any amount of insurance at all. I could be wrong on that, right? Well, let's see, right? Does FTX have insurance? Hmm. Yeah, I don't think they have insurance. Yeah, FTX does not have FDIC insurance. It would never said so on the website. Let's see. FTX.com insurance. Let's see. Yeah, I don't think FTX has any sort of insurance at all, which is a pretty scary situation. Collateral management. Yeah. Yeah, I don't think so. That's a scary situation. Let's see. FTX.com. Let's see. FTX US is a US licensed cryptocurrency exchange that welcomes American users. Take me to FTX.us. We are US based and regulated. Support. Help Center. Yeah, I still don't see anything about hold on. Insurance. Insurance. Okay, yeah. So basically for FTX there is no insurance from what I see. So your money is not going to be protected basically at all, which is a very, very, very scary thing. So if you do want to still use FTX, only put money in that you are 100% okay with losing. This is the reason, again, why I prefer something like a Robinhood. Whether you like them or not, they still have some sort of insurance for protection, right? Just something to keep in mind. Although they do mention that basically the crypto part is not protected, right? Is not insured. So keep that in mind as well. Be very aware that when you deal with cryptocurrencies, you have a very high likelihood of losing your money, right? But if you had your money on like a hardware wallet, if you had your coins on a hardware wallet, you'd only lose it if you lost your wallet.